So in this topic, we will recap on various market movement. So this various market movement is essential for us to make a decision in the market, because we want to make decisions. We want to buy in equities that is goes along with the big major trend. All right. So basically, what we will cover in this topic is that we will learn and discover a few market trends that exist in the market, right? And for trend number one, right? Right. This is what we call, all right, an uptrend movement, right? So how did an uptrend can exist? Is that all right? So we take this as a low point, and this is the high point. And when a stocks move, all right, and when the stock price move, it move up, it move down, it move up, it move down, and it move up again. So when the market make this kind of movement, all right, for example, like this is low, this is high, and this is the new low, which is what we call as the uh, high low, all right, and this is what we call as high high, all right. And when the stock move again, high low, and subsequently move to high high, and this is what we call, all right, an uptrend movement. when when the stock make this kind of movement, all right, uh, when the stock price move high high and high low, right, it means the market is in uptrend, right? So what we want to do in market when the market going uptrend is that we want to buy low and sell high, right? What it means by this is that you want to buy at this price or this price or this price and sell at the higher price, all right? So why this is because why we want to buy low and sell high is that because when the market move in uptrend again, most of the time the the market is in uptrend movement, all right, if compare to downward movement. If we invest, we want to buy low and sell high during a downtrend movement, so we might see that our position would be negative, all right, because of the probability of the stock going up is low compared to an uptrend movement. So number two is we will discover on a downtrend movement, right? On downtrend movement. So how did this downtrend movement, right, created? Is from, right? It's a mirroring from an uptrend movement, right? So this is low, this is lower high, and this is lower low, this is lower high, and subsequently making a new low. All right. So when a market, right, when a stock price move in move lower high and lower low, it means the market is move in downtrend. All right, so what we're gonna do is we want to short a position in this market condition, or all right, rather we stay aside. All right, if we are looking forward to buy low and sell high during this market condition, which is downtrend movement, so we want to stay away from the market. All right, so why is this? Is because vice versa of an uptrend movement, most of the time the stock price is going downwards compared to upwards, right? So if we try to buy low and sell high during a downtrend market, so we might find that most of the time the stock price is red, all right, or negative, all right, if we invest in a downtrend movement. Okay, so that's why we don't want to invest during a downtrend movement. So the next movement is what we call a sideway movement. Now the sideway is pretty special, right? It's kind of a little bit different from uptrend and downtrend, where in uptrend and downtrend we have a direction, all right, either it is going upwards or downwards. So if compared to sideway market, all right, for the first, for sideway market, all right, so what you can see here is that, all right, this is the first high and this is the first low, and this is in the next high it's making lower high, and the next low is making high low, and the next again subsequently in making low high and it's making high low. So in this market conditions, right, you can see that the market is moving in sideways. All right, when the market move in, right, lower high and high low, it means that the market move in the market move in, right, the market move in sideways. Okay, so what you can see here, the stock price contracting into a wedge, right, forming a wedge. So what you can see here is that from this price to this price, it ends up meeting to each other. All right, this line to this line, and it's end up meeting each other. So it's contracting. Upon time, it becomes contracting. So in this sideway market, we again saying that this sideway market does not have direction, right? Is this is usually happens when the market's in corrections, right? Correction periods for sentiment change, right? Now, this is the first sideway, all right? So next, we want to see the other sideway which exists in the market is that, right? So what you can see here, all right? Assume that this is our first low as usual, and this is our low. This is high, and this is making lower high. And subsequently, the movement making high. So at this stage, right, at this stage, when the markets move in high and the low making lower low, right? This is supposed to be uh, right, supposed to be lower low, right? Making lower low. It means the market is moved in sideway, right? Why does it move in sideway? When we talk about sideway market, again, it has no real direction. Either it move upwards or downwards, right? Again, this usually happens in a correction period, right, of stock price. So what I mean by correction is that it's in a process of determining either it will goes up, it will continue to goes upwards, or changing directions downward. All right. So this is what we call as a sideway market. And as you can see, the difference between these two sideway market is that the first one is contracting, all right, and the second one is diverging, all right. This diverge. Okay. So at this time, we will say that this movement is in sideway market. So what we can do in sideway market is usually, all right, it is an opportunity for us to, right, it's an opportunity for us to speculate, right, in the sideway market. Right. So when you goes long, or we want to buy low and sell high, you are looking forward to an uptrend market before you invest, right, in the market. So this is very important knowledge because this is a very essential. This is quite pretty basics, but it helps you a lot in making a profitable trades in the future. Thank you.